Thank you, Maud, Paulette, and Karen for not only covering a lot of ground, but also coming through very clearly with your passion and excitement on what is going on and what could it become. Yeah. So I mean, there were a number of themes that were covered in the presentation, starting from outreach, what kind of people are being covered. More described the ladders from informal to formal in terms of different steps and the linkages. It's a continuum. Then there was a lot of discussion, and Paulette covered quite a lot of ground on impact in terms of gender dimension, in terms of income, in terms of linkages to markets, in terms of building up financial assets and capability. And then there was quite a lot of discussion around innovation in terms of products, in terms of different kinds of partnerships. And then Paulette described that moving from how Barclays, of course, started as a CSR, or social responsibility agenda, but moving towards building a business case over time to show that even long term, it makes business sense for Barclays and other commercial banks to invest in this for the long haul, because these are the future potential customers. Although the difficulties also in terms of the Barclays manager in the video showed that initially people were quite afraid to get into the branch. And in fact, I wrote a paper many years ago in Kenya called Muddy Boots and Marble Floors, which was precisely about not just the poor person, how does he feel when he walks into a very intimidating, very posh branch, but also the whole culture, because I mean, it's not just the wealth, but also the culture in terms of signing of forms, meeting your customers' requirements, etc., etc. So there is the whole cultural divide between these poor customers and the rich banks. And of course, the rich banks also have been in the past giving very clear signals that we are not interested in you by asking for minimum balances of so many thousand shillings, by charging fees which are flat, which becomes very high for low transactions, etc., etc. So so they're differently, or discouraging, or even closing branches where the economic viability is not proven. Anyway, so the big themes that were covered were outreach, impact, innovation. What is in it for the promoters? What is in it for the customers? So the business case for the customers, business case for the promoters, and business case for the supporters. And then, of course, the exciting future which Karen talked about in terms of where does it go from here. So I suggest we take the last few minutes for the future. Let's start with what has been done so far. So we start with issues around outreach, impact, innovation, and linkages. So who wants to fire up first? Yes, you want to start?
What have been the biggest obstacles you've faced with regards to regulation?
For linkages, you mean?
Regulation.
Regulation.
Yeah. But in terms of implementation of the BSLAs, the countries where we are operating within banking on change are not always recognizing formally the BSLAs, right? But they're not regulating them, which make a strength because they don't have to report to the central banks. They can just live their life, right? So that's really the beauty. When it comes to linkages, yeah. But when it comes to linkages, this is where the regulations sometimes can be a bit more challenging. However, in the countries where we have been implementing the linkages, so as Paulette was saying, Ghana, Tanzania, Uganda, and Kenya, we haven't had any challenges in terms of having to lobby and advocate a lot for the groups to be able to open savings account as a group, because the regulation was already enabling that. So it's not the work that we have been done in this area. But we are looking at linkages in other countries, for example, and you might have countries where Mali, for example, the recognition of the VSLA is already challenging, and when it comes to linkages, then the regulation will not allow that. So this is where the advocacy work, the sensitization, the work of having the VSLA recognized within the different tiers of the financial sector is absolutely key for this to be moving ahead. But in the scope where we were implementing, that was not a challenge.
And with regards to the business side of things, because we've changed, we work on the development of the products themselves, and we've made sure that in conjunction with Plan and Care that we take different documentation from the groups. So we need the groups to be recognised but not necessarily regulated. So we've changed the way that normally a group would be able to get access to a bank account so that we can actually work with the materials that the group has, rather than put them in the difficult situation where there would be barriers previously where they didn't have the required paperwork to access a formal bank account. So that's one of the changes that we've made to the bank account to make them accessible to groups.
And that's the power of the partnership, that the partnership can bring those kind of feedback, and then you can discuss it across the table. Yeah, okay, yeah, okay.
I was just going to add as well, looking forward to working with youth, of course. We might find that there are different regulatory issues if we have a group that's made up of only those who are under 18. But yeah, we're going to be engaging with that when we cross that bridge.
Yes, you want to come?
I just want to ask about the move for the 7 new projects, or the 7 projects going on forward. Why have you moved away from Southeast Asia and even what you had going in South America to move towards Africa?
There are 2 parts to that. From the Barclays perspective, Barclays has a very clear community investment policy, and part of that is that we make investments in countries where we have a business presence, because we believe we can make the biggest impact in those countries. When we embarked on Banking on Change in 2009, and the preparatory work started in 2008, we didn't realise what capacity we would have to work together and actually, rather it be just straight corporate social responsibility, for it to be a true partnership. So the countries that we're working on, the next 7 countries, are countries where we know that together we can harness the resources of all 3 organisations to bring about the sort of changes that we're already seeing from phase 1. And that meant some of those countries that we worked in before, we wouldn't carry forward. However, the second part of that, as I'll hand over to Karen and Maud, is that we've made sure that there are proper strategies in place as we've moved away from those countries.
Yeah, so exit strategy in place. For example, some of the countries, like, as you say, South America and Peru, for example, it was a very innovative project that was looking at how can we develop an exit strategy for the conditional cash transfer program of the government. So maybe some of you know, but around 20% of the South American population is supported by conditional cash transfer program given by the government. That means that they receive over a period of 4 or 6 years small income on a monthly basis, that they have to go and take their children to the hospital for vaccination, for those kind of things, but they have those amount of money. And it lasts for 4 years, 6 years, but then after it's done. So what is going to happen to those people? What kind of mentality are we really giving to the children of those mothers who are receiving? So we have worked in Banking on Change phase 1 in Peru, so that we can design an exit strategy. Halfway through, how do we sensitize people to get the understanding of what savings is? How the credit can be obtained by a formal financial institution. Even though Barclays was not present, how can we link with that? So knowing that we would not be continuing in there, we have looked at, okay, which are the other implementers at national level, the government, the Banco de la Nación, the Ministry of Agriculture, that can actually take over this. So it's not that the project have been left aside, they're not part of Banking on Change, but we have really looked at how we can continue it. And the same for the countries where we have not been continuing. So Indonesia, Mozambique, those are the countries where we'll be looking at that, Vietnam as well. And I think the key is the embedment within the national structures for sustainability.
And I think finally it's just important to recognize that sub-Saharan Africa is really where there's the greatest gap that we recognize between the financially excluded and the financial inclusion goals that we have. So I think for Plan and Care both, it's extremely important that we are tackling the regions where we have identified the greatest needs, but also that we have other partnerships in the countries that, like Plan has partnerships in Indonesia working on youth employment and financial inclusion both, that we will be moving forward with. It's not that we're leaving these countries and projects in the lurch.
Also, I think the issue of scale is important, both in terms of policy engagement, in terms of finding cheapest ways of doing it on a large scale, and also then you have the spin-off benefits which Pauline referred to, and I've seen in the field, which is that if in a particular district or community, a few groups get formed and they're doing well, then they become the role models and that spreads. And so therefore it's good to consolidate in a few countries, districts, locations.
Okay,
yeah, that's right. Yes, Pratik.
Yeah,
Pratik.
Sorry. So I'll speak up. So congratulations on the success thus far in phase 1, so well done. The question I've got specifically is what systems changes did you have to put in place within the Barclays internal systems to accept these groups? In terms of KYC, in terms of actual, was it corporate, was it individual, was it a small membership society, things like that, because a long time ago with William Durbin I tried the Susu Collector program, long time ago now, and the biggest challenge we faced at the time was the corporate side of the bank said, aha, thank you very much for doing all the hard work, they're all our customers now, which is fine. I mean, so it actually achieved the objective of inclusion. So what did you have to change on the system side? And B, also what training did you have to provide to the bank branch tellers to accept these people when they earlier to take shoes off and walk in, now to actually interact with them the right way? And the cost considerations, if you can share something like that.
And if you can also say, how do you then also make sure that the other mainstream, high net worth individuals who are walking into Barclays branch, they don't feel intimidated by these poor people walking in. That's the other side of this.
Brand dilution.
Because you can't be a bank to everybody. Anyway.
I think it's a really interesting question, and I joined after Will and the Susu Collector, so it was a pioneering step forward, and picked banking change up once it had been initiated. Very interesting. I'll go in reverse, because it was only 3 months ago when I was in Uganda and I was in our branch, and I watched our bank tellers and Andrew, the bank manager, who's in the film, and I can tell you this is way beyond the concept of corporate philanthropy or them thinking that they're doing a good thing. They actually see themselves as part of the community, embedded in the community. I went with Andrew to visit a group with a number of senior people, actually. I'm not a huge fan of that, but that's what we have to do sometimes. And we all sat around as they were going through their group business. And of course, by way of protocol, when you're working with a group, the introductions have to be done with the most important person last. And the introductions were done by the chair of the group, and I was absolutely rock bottom, first person to introduce me. And so it went up. And then it got to the sort of quite senior people I was with, and they were being introduced before the bank manager. And you could see them thinking, I'm the most important person here, but fair enough. And then they said, now we'd like to introduce the person that's made all this happen for us, and introduced Andrew. And it's because he has a relationship, and that relationship is partly because of the way that we work with Plan and Care, because we work with our staff, they go out into the communities, and the community groups are then invited back to the branch. There's often a savings group champion within the branch, so that's quite new. And the champion is helping the community not to feel intimidated or inappropriate going into the branch, who helps to prepare them for the culture of banking so they're not intimidated by either the forms that are presented or the booths that they have to fill the boxes out in. So it's done in a very sensitive and thoughtful way. They already know that person before they go into the branch, so it's not like they're dealing with strangers. And likewise, when I talk to our staff, they're really proud to be doing this. They're part of the community, and someone said to me, what it means now is that we're a bank for the people in the country that we live in. Now, I was quite surprised about that, because I wondered whether there would be this elitist attitude. I have to say, I have never seen that in a branch. So that's the sort of teller branch attitudinal shift that I've seen at the grassroots level. I don't know how that was 4 years ago, but that's where it is now. Within the business, what we've done is the programme then, led by Will, was very much driven from a community investment perspective. It's now embedded in the business. So the product development guys are involved hand in hand with the community staff as well. Actually, you're right, it doesn't really matter if they get to the point of saying, these are our customers now, as long as the customers are treated in the right way and in an appropriate way for the customer base. And that comes from the know your client principles, from the do no harm principles. When you bring those together as a business and a not-for-profit organisation, you've got the best interests both for us as business And they recognise these are our future customer clients. It makes sense to have a strong local and national economy working with those communities. So I think you'll see it's coming from a very different perspective now.
Yes, last row, Baba? No.
I just wanted to find out if you had any interest from other banks or organizations in learning about what you were doing. Did you happen to understand a Chartered or Ecobank or some of the big banks in Africa? Especially in countries where you're not present, at Barclays or Plan or Care. And then also, is there, you mentioned partnerships or you'd like other organizations to follow suit. Do you have a process for that so they can approach you in a certain way to get that done?
Can I take one more question?
Sure.
And then we can respond to that.
Please.
Yes, you want to? Yeah, just pass the mic. So we'll take 3 questions, then you can respond together. So
yeah, thanks, Mike. I wanted to go back to the previous question actually, because first of all, it seems to me that one of the key achievements of this is not the number of savers that we have in the thing, but the people coming out the other end. So that people who no longer require the group savings. And I may have missed it, but I didn't see the number of new accounts or something, because that's really almost the key performance indicator. And related to this, because I didn't quite understand the answer from the previous question, when there's a group saving with the local branch, are all the individuals named on that account? So how do they actually graduate from the group to becoming, having an individual account? What actually does the bank do to break the group into the individual so that the individuals get an account? I'm sorry, I think that's really quite...
Okay, we'll take one more on this side and then we'll come to this side, the lady here on the 3rd row.
My question's pretty much the same, even a step before that. I'm interested in the higher levels of your ladder, how the groups work with the bank, what kind of agreements you have, to what extent that individualised or not. And the other part of the question is what training you put into that, what does it cost, the training per person or per group? And you said for the VSLAs that it's a year's training, so how long is the group training at the upper end of the ladder?
Okay, lots of questions.
Okay,
lots of interesting practical.
I know.
Yes,
Yeah.
yes. Let's take those 3.
That's right.
Yeah.
Okay, so this is very interesting. I think we are at the heart of what Banking on Change has really tried to do. One thing first maybe to say that would we want it or not, the people in the VSLA that you have seen are already going to formal financial services. You know, we had that debate in one of the MicroFinance events. I think people are saying, no, you should just leave those people where they are because they're going to be contaminated by the global financial crisis, so just leave them there. That's not the reality. People are already going to the branch. They are knocking on the door of formal financial banks to actually get services. Some of them. So the ladder that you've seen is one scenario. That's like the kind of the ideal scenario. You start in the VSLA, even sometimes you have been below, but you have been supported to actually jump up to the ladder. You go onto the BSLA, you start your informal savings and credit, then you can get trained so that you can understand what a formal financial institution is, so that you can have access to the savings first. You deposit your savings. Some of them will just stop there, but some of them will need credit. And some of them will need business skills so that they can actually benefit better from their credit. And some of them, and that's what we have started to see, are becoming to become individual clients of Barclays. And so we have seen in Kenya and Uganda particularly, groups, members, who have been so confident after having been a client of Barclays through the groups, which have actually graduated into an individual. But what we have seen is that they do remain in the VSLA. They do remain because the VSLA offers a complementarity to the service of an individual account that you could not get there. You can have very quick access to any money, much quicker than you would have in the bank. So I think this is, when we say about the ladder, this is probably one scenario. And then what's happened with the others that are going to stop at the savings level? What happened with the ones who are going to go just maybe for the credit, but not too much, and then the ones who are really going to be. This is what we will be looking at in terms of the second phase. And the handbook in terms of linkages, the business model, this is what we will be developing. So the question that you were asking, are there other banks that are interesting? Yes, because they see. So what we have seen is that with the Banking on Change experience, In Uganda, for example, you have Centenary Bank, you have Bank of Africa, you have Post Bank, which have approached care and plan, and we just say, okay, so can we look at what you have done here? How have you done that? So we have the principles, we have a training process, so the branch managers are trained, the VSLA are trained as well. The intermediary, which are actually also delivering the training, are properly trained, and this is a mechanism that is being replicated. But now the next step is how do we make sure that this is done in a do no harm, as Paulette was saying. Because linkages can be replicated, but you can have linkages badly done. Wrong product, wrong savings, wrong credit, very bad training, or even a total absence of training. And this is where the critical thing is going to happen. So if not everyone is meant to be linked, I think we, as a partnership, we have a responsibility to make that this linkages is done in the best responsible way. And so developing responsible linkage for the next phase require advocacy, sensitization, understanding by other banks, like the global ones also, as what we have been doing, so that if replicated, it is replicated in the right way.
So that answers some of the questions. You want to pick up some of the others?
I'll pick up on some of those, if I may. I mean, I think the point about the end product or the end user as an individual account is a very interesting one. And actually, right at the top of Maud's ladder, it did talk about individuals having bank accounts. When we embarked on this, it wasn't something that we set out to measure, because we were really looking to pilot group linkages. But what we are seeing is exactly what Maud said, that individuals are increasingly wanting their own bank account once they have the competence and the skills in a formal financial institution. So the next phase, ask me again in a year or 18 months' time when we've started to collect some of that information, because we haven't been collecting it. But it's very interesting. Every country you go to and you say, that's operating linkage, have you seen individuals taking out bank accounts? They say, absolutely, we have. Well, how many have you got? Well, we haven't made the correlation between the savings group and the bank account, the individual bank accounts yet, but that's what we're going to do now. So I wouldn't be able to give you accurate figures on that. You're right to say that it's an important next step, and it's certainly something that we're looking at in the next phase. And we bank the group, not the individuals. So there are 3 or 4 signatories to an account. We agree when we set up the account that there are named signatories for the group who represent the group, and it's a group account, not individual accounts. So we don't lobby the individuals within that group. It comes from a group account perspective. On the how do we work with them and how long does training take, I think there's a little bit more that Maud or Karen can add to that, but I think there's a really important perspective on that. Groups aren't, it's set up on the principles, it's mature groups that get linked. So groups have to already have gone through at least one annual cycle before we would even consider the training to help link them to a formal financial institution. So they already have a degree of financial literacy, money management skills, and some of the additional training before they're even considered for linkage. And that's linkage to a savings account. In Uganda, where we have the overdraft product, a group would have had to have saved effectively and comfortably for, and I mean comfortable for the group, for a year before they would then actually be able to be considered for an overdraft account. So you're not embarking on getting people who don't have the skill set to manage their money, you're not capturing them into accounts without the skill sets to make the decisions about how they manage the money themselves. I don't know if there's any more you want to say about the duration of that training.
I was thinking one more important thing which has not come up very strongly in the discussion so far is the whole issue of transparency in a way which basically makes even very illiterate people with very small amounts of money feel comfortable in the whole process. By simple things like, nobody takes away the money, neither care nor plan. I've seen this now in a number of countries by different promoters. The money stays in the community. And they have very simple systems, like we have corporate accounts. They have 3 locks to the cash box. And 3 different keys have to come together at the same place at the same time to open the money. Yeah? And all the money is collected in front of everybody, so so there are 20 pair of eyes or 15 pair of eyes watching every transaction. And then they have an annual, what I call an annual action audit. So all the money is taken out, all the money which was loaned has to be returned by that date, and everybody then, that is when you calculate what was the return on that savings over the, and both the savers and the borrowers benefit. Borrowers get immediate money when they need it, and the savers get a good return on their savings. So that's what holds the whole thing together and makes it exciting. Yeah, can we now go to another round of questions? I'm starting with Anand and then the three ladies, 1, 2, 3. Yeah.
My compliments and wonderful work done. But I have one question. That you informed us that return on savings is around 37% to 45% year on year. So I don't know how it happens, because either the loan which you give is at a higher rate of interest. If it is at a higher rate of interest, then how they are going to invest into the business, and how that high rate of interest is going to give you a yield of 35 to say 40%. Because of this, whether there is any sort of non-performing assets which come, and what is the percentage of your non-performing assets out of the total sort of credit you give?
Okay. Yeah. We'll start from there then.
I'd just like to understand whether there was any evaluation done about after the exit strategy, one-year exit strategy, how many of the VSLAs were disbanded in year 2 and year 3? How many fell apart or joined other groups is the first thing. And secondly, a little bit more about the youth side of things. Although financial inclusion, financial training is important, one of the biggest issues, especially when I was working in Tanzania and Malawi, all the youth were saying that it's a skills training that they're really lacking in. How is that being sort of included into the whole proposition?
Okay. Yeah.
Hi, I'm Rachel from 5 Talents, and I'm really interested in Maud's comment that even people who get individual accounts with Barclays want to stay as members of the VSLAs. I'm wondering how that plays out with your own relationships as organisations going forward. So will there come a time when there's a plan bank and a care bank offering the services from VSLA up to bank, and Barclays has a VSLA team as well as a corporate wealth team? Or do you always see it as the NGOs provide the bottom end of the ladder and Barclays comes in higher up the ladder? How's that going to work going forward?
Thanks, Rachel. Yeah, pass it on to the next row. Yeah.
Hi, I was just wondering a little bit more about whether or not you're using this as an advantage and as a way to speak on a national level and on a transparency level. Often we're working in countries where governments themselves struggle with transparency, and whether or not you can use this as an advocacy tool to help promote internal national transparency, linking to financial, getting away from financial opaqueness and working with district level officials. I haven't made myself very clear. But I guess linking up with the authorities who feel so often apart from the NGO world, and whether or not you're using it as an advocacy tool to help bring them into financial transparency as a model.
Okay, those were plenty for you to take on the next round. Yeah. Yeah.
Well, I can start perhaps with the youth-focused question. You're completely right that young people are often requesting not only entrepreneurship development skills, financial education skills, life skills, which can be everything from entering the world of work, but also gender relations, sexual and reproductive health and rights. They are requesting all of those, and they are often also requesting access to vocational skills. Our focus in this program is definitely on the former set, because that's what we're set out to offer, but recognizing that in the countries where we work, Plan especially, but also CARE, and also other NGO partners have vocational skills programs that we are going to be signposting our savings groups members to. So we basically are going to be developing those linkages across the programs that we have to make sure that where those vocational skills, rural or urban, are available, we are going to be making those links. And I think we've already started in India, in urban India, where we've got kind of producer groups which are linked, using their financial assets as groups to start small businesses as groups, and are linked to other projects which are providing vocational skills in order to be able to do that. But we ourselves are focusing on the other sets of trainings that youth are also requesting.
So maybe on the other question, on the interest rate, so the group do decide on the interest rate themselves. So we're not imposing any interest rate. Usually it's between 2.5 up to 10%. For calculation purpose, usually it's 5 or 10. So the group decide on the interest rate that they want. So it's 5 or 10% per month. Yes, obviously for us it seems like a very high interest rate. But it's still lower than any money lender's interest rate that you could have. And the money is for them. It's not for the institution. It's for them to actually work around with their capital. And the access to the loan within the group, because it doesn't require any guarantee, any asset, any ID, the access of the loan for them, even if the interest rate seems to be high, because they have activities that have usually a high return on investment, that allows them to have an access to the capital much more easily than they would have outside of the group. However, there are people who are not able even to join the BSLA at that level. So what kind of program can we have for those who are extremely vulnerable? On the question on I think the retention rate, so you have seen like 97%, the group continue. We have done several studies and we see that 5-6 years after the groups are still there. Maybe one other thing that we will have to look more in depth in the future is about youth. They're more volatile, they're not as stable, they want to migrate. So there is something here that we need to look at. What is the approach that we're going to use for the youth to actually be entertained or be really interested in this? This is clearly something that is a challenge, and that will be a challenge for the partnership that we will need to look at. And then the follow-up your question, there were two parts?
The second one was answered by that.
Yeah. Sorry.
Okay.
I was just going to pick up on, is there going to be a Barclays charity organising VSLAs and a Plan and Care going to open banks? I can't comment on whether Plan and Care are going to open financial institutions or not. We're very clear that we are a financial institution and that's our responsibility. The reason that we engage in these programs and that one of our criteria is that we provide opportunities for Barclays colleagues to engage meaningfully in these programs is so that we can harness our skill set as a financial institution in an appropriate way, often either through business, as we talked about earlier on, or through skills-based volunteering. Actually, our staff can volunteer in whatever capacity that they like, and we're very up for that. Over 60,000 Barclays staff do that each year. But if they can utilise their skills, having been part of a financial institution, then that's far more important to us. And that's what we can do through Banking on Change. And we would continue to do that in any capacity. But I can't envisage us setting up an NGO that's going to create savings groups in that way.
Maybe to add to that just on this one point. I think the challenge for us now is there is no way this partnership, as brilliant as it is, and I'm saying it because I've started from the beginning and I truly believe in it, there's no way we as Plan, as Care at Barclays, we're going to be able to broker any single relationship between the informal system and the formal system in sub-Saharan Africa and even at global level. So what needs to happen? And this is where we're actually going to work in the phase 2 so that we can engage others, so that this model that is being piloted here, and we as Care, we are doing some of the pilots with financial inclusion and also very much looking at the mobile components. So what is going to be the role of the mobile technology in the future? But how are we going to make sure that the brokering of each of those is going to be taken up at some other level? Otherwise, there is no way the gap for financial inclusion, 2.5 million, at some point is going to be tackled in the next few years.
And I just want to pick up on the point about transparency and national advocacy, if you like. And I'll just touch on that, and I'm sure Maud and Karen will come in. But I think we learnt a lot in phase 1, and the Breaking Down Barriers report was a distillation of what we learnt. And as I say, some people might have, in the room might have been involved. I know 5 Talents, for example, were involved in the consultation process that we developed around building that report. We opened up a conversation, which actually is quite unusual for the private sector and not-for-profit sector to open up in such a transparent way about what could be done. Now that was the sort of start of advocacy. As part of that process and as part of the next phase, we want to take that to a national level as well, to the countries that we work in. We recognise that together we actually have a powerful voice. If you merge a commercial business like Barclays that has a big presence in those countries, good relationships with the national financial institutions, and then the credibility and the experience of Plan and Care, we actually have some influence. And we've already started that process through a series of workshops and consultations that we're carrying out in country that bring key players around the table together. The reason that we could talk about this methodology being accepted in Uganda is because of that sort of dialogue. So it is starting. I'm not sure we could have done it in phase 1 without the learnings, but it's definitely part of phase 2. I don't know if you want to expand on that.
Yeah, I think just, is that working now? I think just to add to that as well, recognising that Plan and Care are really embedded in the communities that they work in. So if we're talking at the most local level, local government, they're involved in the community sensitisation processes when we start to set up savings groups and when these linkages are made. So they're there at the table and they know what's going on and they're engaged in the process of sort of opening up what, the kinds of financial relationships that are being developed. And it's one of the strengths of the partnerships that we have that community embeddedness from both of the NGO partners.
Yeah, but the biggest advocates finally emerged from the local leadership in terms of, as I think more presented, and I've seen it in action in lots of places, where some of these people who start as just BSL leader or a group leader emerge into something more substantial, and they have their community linkages, and they become the biggest advocates and champions for some of the things. But I'm cautious of time, but I also see a lot of enthusiastic raising of hands. So I will spill over a little beyond 8 o'clock, starting with Mosley, and then we'll go there, and then we'll come to you. Yes.
95% repayment rate is commendable. I congratulate you on that. But my question is related to 5% delinquency. What is the main reason for the delinquency? And then what happens to them? Do they drop out and disappear? Or you nurse them back and rehabilitate? And what is the rate of success in that?
Yes. Just one. Yeah, there.
I'll just speak up. Just a question regarding savings, I suppose. We call these products saving products, and fantastically good work is being done. But my definition, and I don't think I'm the only one regarding a saving product, is that there is a guaranteed rate of return. And in these groups, what we're actually seeing is that money is being put in, that is great. Subsequently, the money is being lent out, but it is actually, in Western terminology, angel investment. It is investment in very small businesses. And there is a potential return that those funds will come back, but it's not guaranteed. And therefore, these, what we call saving groups, are essentially very small little private equity businesses. Now, maybe I'm taking it too far, but the reason why I mention it is because we're moving in the industry, we're moving further and further, and we're getting to a level whereby large corporates such as Barclays are getting involved here, and we do have possibly some consumer concerns to deal with and reputational concerns to deal with in the future. And my question to you is, have you thought about that, and are we using the right terminology? So I might be very much wrong.
Okay, there's one here. But before that, I want to ask for forgiveness for anybody who raised their hand and have not been allowed to speak. Can I first ask anybody who has raised their hand previously and not been allowed to speak? No. Who raised their hand previously and have not been allowed to speak? Have I missed anybody? Okay, then this person.
I just want
After you.
Thank you very much for a very inspiring evening so far. And I have a much more basic question, I think, which you started kind of touching on a bit throughout the evening. But I just want to know if you could talk us through a bit more the mechanics of what happened, how the VSLA does link to the Barclays products. Sort of what happens at the VSLA level. Does it replace the box, or is it a separate pouch within the box? Or how does that kind of work? Very basic question.
Can you pass it? That's the last question.
I just wanted to ask just a clarification on the role of Barclays and the role of Care and the role of Plan in the whole partnership. And also, second question, what is the connection between individual groups? Are they all individually working, or there's any connection between the different savings groups?
They're essentially federations of savings groups which have gotten together recognising that they can group their savings together and have access to more capital. And so we're still piloting that approach, but we're seeing a lot of success, and there's interest from other countries in looking at that as well. So generally we're working with individual savings groups, but now we're looking at how we can federate and how they operate on their own, as well as how they link to the formal financial sector.
Okay. I was just going to, if we're going in reverse, I'll pick up on your other bit, which was the role of Barclays Plan and Care. I think you've sort of got an indication of our areas of expertise. The way we work together and the roles that we have is we're a very equal partnership. What you'll have seen is you'll see a parity of our identities. We have a governance structure that mirrors that from the senior level, where we have an executive committee, which are the chief executives of the two organisations and our chief of staff, right through to country level, where there's a management committee in each country, where Barclays and Plan and or Care, depending on which NGO is leading in that country, set the framework, the direction, the targets, the regions and the implementing partners for that particular country. So it has a very country-driven context. We know the roles that we play. We all report back on our key performance indicators. So Barclays will report on the number of groups linked, the number of staff engaged, and so on. Planning and or Care will have responsibility for monitoring some of the results that you've seen through the framework that I talked about. So we do have very clear roles, but we work very much as a partnership. Needless to say, you know, we talked about Barclays investment. Barclays makes a £10 million investment over 3 years, but that doesn't just put us in the position of a donor. And I think, you know, I look to Karen and Maud, but I think they'd probably say we aren't just a donor, we're much more of a partner. So there is a financial issue there, but that doesn't mean that it shifts the way that we work. The strategy that you see for the future is the one that we put together based on need and in line with where there is greatest financial exclusion and where we can make the biggest impact. Does that answer that part of your question?
So just on the linkages, so the beauty of the methodology is preserved. So we are not saying to people you should drop the box now that you are linked, you should go and not having these meetings. It's just exactly the same. And particularly picking on the point that Sukhvinder was making, at the beginning you are under the tree and you see all the operation, and all of a sudden you know that 3 people are going to go at the branch and deposit the money. So it's like, oh, what's going to happen? So we don't touch the methodology itself, and that's also answering to the question of other banks who wants to link. This is like the basis. If we want to link, if we want to have that, you can't touch the methodology itself, or you have to really think about what is best adapted to that. To be fair, the methodology has been designed back in 1991 in Niger, in the very remote, extremely poor context, and now we are 20 plus years after. Africa has changed, so it's not the same, and we have to be clever and adapt and really do that. It benefits to the people, but it remains the same. So to answer to the question on the dropout, what we have seen, not that much actually in banking on change, because we have seen more in Rwanda, in the most vulnerable country, where actually, yes, people can't pay, they can't revolt. So either there is a solidarity mechanism that is being put in place, and some people helping out for the person who can't, or they actually live in the group. Yes, that's true. And so even if we are working with the people who are on the $1, $2 a day, there are still people who are too poor to be part of the VSLA. They are too vulnerable. So they start and they start saving, but after a few months they just realize that it's too tight. So those people, they need to be supported by other kind of livelihood. And this is where Care and Plan can actually put in place some systems in the communities. Either we have intervention on water and sanitation, on education, on food emergency if that's needed, or those kind of things. But we recognize that there is something. And so building on the ladder scheme, it's like this scenario is one, but what's happened with the ones who are below? So the conditional cash transfer that I was referring to Peru is one of those. Those people are probably the ones that will be tackled by the government through those conditional cash transfer programs, and then we can help them moving and stepping onto the ladder. But yes, this is the thing, and this is why we don't have the answer for anything. It's not like we are providing everything to everyone. It can't work like this. Yeah.
And with the savings group, is it a savings product? I can do the Barclays bit, and then I'll let Morden and Karen do the community bit. For us, it is a savings product. There is an interest rate that goes on their savings if they save within that product. So what we have done is adapt the product to make it accessible and meet the needs of the group, whilst recognising that it is still a viable savings product. So they do get a return, an interest return on their savings within that product.
So between the group and the Barclays?
With Barclays.
Yeah,
so Barclays pays a rate of interest on the group savings account, which makes it a savings product. The only difference is that it's a group savings product as opposed to an individual savings account, and we've adapted it to make it easy for and appropriate for groups to take up, whereas previously, as I mentioned earlier, we take the group minutes or the group committee documents as opposed to formal registration documents. We provide assistance in form filling and all of that sort of thing, where otherwise that might have been harder. The minimum amount to deposit to access the savings account is less than it would have been before. And on the overdraft product, we do adapt the interest on the overdraft product, so they have an overdraft rate of interest which is lower than any other product in the country. So, they're real products, they've been developed through the appropriate processes, but they meet the needs of the community. With regards to the savings as a savings product within the group, I'm wondering if you want to talk about the social fund, because that takes it beyond being private equity.
Yeah. So basically, the group is on top. I think I mentioned it at the beginning. The group is doing their savings. So at the beginning of the meeting, they put a goal for the savings, but there is also a goal for the social fund. And so this social fund is something that people do also contribute, so that it can be either an interest fee or a grant for the members who actually need it for any emergency that they can face. And the group decides. And the group decides. So it's again, the ownership is within the group. And because it's building on, the merry-go-round system in East Africa, the tontine in East Africa, in West Africa, the Eku Bidir in Ethiopia, this is really we haven't invented anything. Like we said that we have started back in Niger, but neither Yunus has invented microcredit, neither has invented really we have kind of formalized informal, but it's still informal. But it's something that is already existing, embedded into the local community, as Karen was saying. So the knowledge of it allows us to push a little bit and to make sure that people are not losing the way the environment is moving forward. It's moving so fast that we kind of have a role to help them, making sure that they are not missing the boat, and that we can really diminish the gap that is existing between the two.
Just to finally end, I think that no set of financial relationships is without risk. So even a small group of people who all know each other well, getting together to save and borrow and come back, of course there's risk, and it's not always that money is returned. But we do find that even in countries and even in contexts where very little is being loaned out because people are unused to the model, or there seem to be very few income-generating activities there, even in those contexts, because you are guaranteed that at the minimum you are getting back your own savings and you are going to get a little bit of interest. I mean, it's not a formal guarantee, but the case is that that's always coming back. There is always risk, but savings groups are really the lowest risk possible that you can find for a place to put your money. And as we say as well, even the money is coming back into the community as well. So even if you are, what you're getting back as savings interest is being outstretched in some way for that particular cycle by what is going out in loans, it's staying within the community, and the community makes the decisions. The savings group makes the decisions about exactly how that's going to run. So it is a savings product in that way.
Okay. Sorry, we will have questions, but over drinks outside. Thank you very much. I would like to give a big clap of hands for